Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about ticker symbol MCD, also known as McDonald's Corporation, those golden arches. So now before we actually jump into the episode, I want you guys to go ahead and check out my blog, moneywithcarter.com, talking about investing, money management, trading, stuff you guys would definitely benefit from. So now the biggest thing, I want you guys to learn something, and if you guys do, make sure you guys smash that like button. Roll the intro, let's jump into it. Bam! So right now during this market volatility, some stocks are going up, some stocks are getting slammed down. Now McDonald's has honestly kind of been performing pretty decent. The reason why is because their drive-thrus are still open, so they are still making some money. But overall, some franchises and some franchisees are hurting pretty bad. But McDonald's is definitely helping them out. McDonald's is reaching out to all the franchisees, seeing what they can do to preserve those businesses, which is honestly a pretty cool tactic that they're doing. Not to mention, McDonald's does have $5.3 billion in cash sitting there. This is a 135% increase over the year. They've saved so much money, they're ready for this pandemic and they're ready for this recession. Now another cool little fact is McDonald's does buy all the property that you see all of the restaurants on, and they lease it back to the owners, which is a very, very cool tactic because technically they do own all of those buildings and they're just leasing it to the owners. Also, they are one of the largest real estate owners in the United States and in the world. Now, in the upcoming future, I could see McDonald's cutting their dividend to preserve cash, but if they don't, you guys are going to be getting paid a handsomely $5 per year per share, which is pretty good for a stock that's trading at $185. So if you guys have a couple hundred shares of that position, you guys are going to be making some serious money off dividends. So one of the things you guys have to look out for with McDonald's is they have been in the news about labor battles, whether that's, increasing wages, whether that's, getting full benefits, stuff like that. They're always in the news for. So it's just one of those things you guys have to, look out for when you guys are a McDonald's shareholder. Also, McDonald's has performed phenomenal over the past couple of years. They beat all of the major indexes like the S&P 500, Dow Jones, NASDAQ. They are putting on a lot more healthier options, and they are definitely taking a more approach with coffee and that breakfast side, which is awesome. So in my personal opinion, I do think that this is a stock that you hold for 2 or more years. The reason why I say that is because I do think it's going to take a little more time for the stock to recover, and I do think you're going to be getting paid all these dividends, so it really wouldn't make sense to sell. So now we're going to turn to the computer, look at the overall stock chart, look at support, resistance, where I see the stock going, where I own the stock at, and where I see the overall future for it. So now let's jump into it. Alrighty guys, so we have ticker symbol MCD, also known as McDonald's Corporations. So now you guys can see that this stock has this beautiful growth. And as you guys see this yellow line here, this is what you call a 200 moving average line. So this stock, when the stock's above it like it is all the way through here, this line acts as support for this stock. So anytime it's come in contact with it here, 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 and even all the way down here. So this was the first time that this stock broke below it. Before, this is what you call support lines. So this is just when a stock has a tendency to bounce and get bought up at that line. So you guys can see every time it's hit it, it gets bought back up. So now, just recently, the stock got hit majorly and immediately got bought back up. The reason why I do think that it got bought up that fast is because it was the first time it broke below this 200 moving average line. So you guys can see I'm holding the stock at $180. The reason why I think that is because I do think a fair buy for this stock is under $200. So I do think getting in this stock under $200, you guys are going to be doing just fine. Where do I see this stock going in the future? I do think that this stock has definitely potential to slowly start squeezing up to, $260 to $300 within the next couple of years. More of a long-term approach, 2+ years. Now, do I think that this stock is going to be a stock you get rich quick? No, I do think that this stock is going to be perfect for people who are building a dividend portfolio. I think that dividend portfolios are amazing. You are building up a passive income stream. This stock should be in it. You're getting paid $5 per year to own this stock. Now, looking at it, the RSI, you guys can see it's at a 45. So the RSI is a relative strength index. So this determines whether a stock is really overbought, oversold, and you can just get a good understanding of where the stock's at. Because you guys can see when it gets overbought right here, we have a tendency for sell off. all the way right here, little sell off right here. You know, you guys can see almost any opportunity that this stock has presented is when the stock is oversold. So anytime the stock's oversold, it needs to get bought back up. So that's where we also have a tendency for the stock to bounce. But where are some support and resistance lines? So obviously there's some resistance right here at 179. And that is a pretty strong, one of the strongest on the charts. The reason why I say that, let me go ahead and draw this out for you so you guys can see it more clear. So you guys can see it's hit it here, got sold off, broke over it, immediately tapped it. So now this is a support line. This is a very strong support line. So now when the stock's above it, this is support. So that's why I got in at 180, because I do think we'll have a tendency for some little bounce in between there. Now, do I think that this is going to be a stock that you hold for a week? No, long term. Don't forget that. I do think getting this stock, I would highly recommend it. My recommendation is a buy for this stock. So I do think you don't need to really wait for this stock to fall. I think getting in at this stock at that price is a pretty solid buy, especially if you're holding it for the next couple of years. I think this stock has a lot of growth potential, so I hope you guys actually go out and buy a couple shares of it. So now that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Take care and have a good day.